Hello, welcome back to another video. In my previous video I have posted my 4 transactions within the journal ledger using the journal entries. Now we will continue further 4 journal entries. We will post them in the journal ledgers. In the first entry, previously we have discussed about bringing cash within the business, basically owner, which is the shareholder of the business, who brought cash within the business. And in my second transaction, we purchased good of 20,000 rupees using cash, so the inventory increased and the cash decreases. In third entry, we have purchased office supplies, which we consider as office supplies and the stationery expense, which we carry out within the office use. And then in fourth transaction, we have discussed about carrying out sales. Basically half of the sales costing 20,000 rupees are based on cash and 20,000 rupees based on debts. We will continue our today's transaction here. Basically we will talk about the fifth transaction here. Basically in this video we will talk about our fifth, sixth and seventh and eighth entries. Basically in fifth, sixth and seventh and eighth entries. Basically in fifth entry we are using a location for our office use or for maybe for the production use, which we have to pay rent, and we have paid rent of 2,000 rupees with the cash. And in my sixth entry we about purchase 20,000 goods from creditor Ali based on credit, because we haven't paid cash yet. And in my seventh entry we carry out drawings for our personal use. And in eighth transaction, basically we pay the wages expense, basically the daily wages of the labor. So let us start today's video. We will create T accounts, journal ledger using journal entries. Here we start today's first transaction. In basically the first transaction here we write rent expense account, right side debit balance, left side credit balance, rent expense to cash account amounting 2,000 rupees. Basically why we carry out cash here, basically the rent expense account which gets debited, because whenever there is increase in expense it will be debited. So rent expense increases, then the rent expense account gets debited. On the other hand, the cash is the reason behind getting debit of rent expense. So rent expense account gets debit due to cash account. Here we will see the clear image of this transaction. The rent expense account gets debited with cash 2,000 rupees. Now we will show the effect of same entry, because every entry has a debit and a credit effect. So here we write debit and credit. Now the cash account, basically cash account gets credited here. And what is the reason behind getting credit is rent expense. So here the cash account gets credited with the amount 2,000 rupees, which is rent expense of the period. So we paid rent using cash, so the cash account gets credited. The reason behind getting credit is rent expense account. Here we can see the clear picture here. The cash account gets credited. The reason is rent expense account with amount 2,000 rupees. Now let us talk about the sixth transaction here. In this transaction we have carried out purchases, and the purchases in the form of inventory, which we call as goods, and we haven't paid to that creditor. So the creditor Ali is our liability and we have to pay that person in future. Here we will create T account, goods account gets debited. What is the reason behind the debit of the goods account is creditor Ali account with amount 20,000 rupees. So basically we have to pay that person in future with amount 20,000 rupees against the goods. Here is the clear image of that transaction. Goods account gets debited. The reason behind is creditor Ali with amount 20,000 rupees. Now let us talk about the credit effect of that entry. Basically every debit has a credit, so here the reason the second account gets affected is creditor early account. With every creditor or every debtor we have to mention the name, because every creditor has its different account and every debtor has its different account. So even a person is a debtor and or a creditor at the same time, we have a two separate account for being a creditor and for being a debtor. So here creditor account gets credit with goods account, amount 20,000 rupees. Here we will see the clear picture of above transaction. The creditor early account gets credited because this is the liability. As the liability is increasing, so whenever the liability increases, the account gets credited. So here it gets credited, and with the reason behind getting credit is the good account. So the good account gets debited and the creditor early accounts gets credited. The reason behind getting credit is goods, and we have to pay that person in future with amount 20,000 rupees. Now if we talk about our 7 transaction, here we go, our 7 transaction, debit, credit, and we will mention here drawing expense account. Basically drawing is whatever we draw from business, whatever we withdraw from business is our drawing expense. So here the drawing expense account gets debited because expense, whenever there is increase in expense, it will always be debited. The reason beyond the debit of the drawing expense account is cash with amount 3,000 rupees. Now here we will see the clear picture of that transaction. The drawing expense account gets debit and the reason is cash. So if we see the second effect of the same transaction, here it will affect the cash account because cash is reducing from the account. So the cash account gets credited with drawing expense with amount 3,000 rupees. So here the cash account gets credit and the reason beyond that is drawing expense. Here is the clear picture of the 7 transaction, cash account and the drawing expense account. Now let us talk about the last transaction of today's lecture. Here we write debit, credit as usual, and wages expense account. Basically according to the concept, expense is increasing. Whenever there is increase in expense, it will be debited, and the reason beyond debit is the cash. So the wages expense account get debited with cash 1,000 rupees. Here is the clear picture of above transaction. And if we talk about its second effect, we will write cash here, cash account, debit balance, credit balance, and cash account gets credited. The reason is wages expense account with amount 1,000 rupees. So here the cash account gets credited again, and the reason behind the credit is wages expense account. Here we will see the clear image of the above transaction. The cash account gets credited and the reason beyond that is wages expense. In my next video I will show you the accumulated balance of all the transaction of all the accounts. Basically we take out 7 to 8 entries here, and there are about 7 to 8 effects of each entries within the cash account. So we will show you what is the accumulated cash account. Basically what are the effect of all the transactions in cash account, and we will further show you all the accounts, and then we will close it with carried out balance, and we will move it to the trial balance further. So up till now, if you like my video, kindly subscribe to my channel and press the bell icon. Have a good day.